Hey everyone, Matthew Rufh here with the Rufh Real Estate Group for your November market update. Well, if you've been following along the last few months, the trend is we're seeing a high number of inventory, we're seeing very few sales, and what does that give us? Indecisive buyers. And that is exactly what we have right now. Buyers have so much to look at that they just want to keep looking. There's decision fatigue, there's buyer fatigue, all of it combined into one here. So what does that mean for sellers? Well, this is the best example I can give because I just heard it, we've seen it, and it's very true out there. Anything that's sold in January, sold for X. We are seeing things that sell in July, or July this year, that are very comparable, and they sold for a lot lower than what they did in January. And just recently, October sales, we saw a product that was very comparable to January's, July's, and it sold in October for a lot lower than it did in July. So it is a race to the bottom, unfortunately. You don't want to hear that if you're a seller, but that is exactly what it is right now. In 2021, you reaped the rewards of every week it seemed your house would go up 5,000, 10,000, 25,000 in value in certain areas because we had a hot market. Whereas now, it's almost like you're losing 5,000 a week compared to your previous neighbor or competition in the area. Maybe not 5,000 to 10,000 a week, but you get what I'm saying. If you sold in January of this year, you sold for a lot higher than you would have sold for October in this year. So what does that leave us? Where does that leave us? Well, we just had another Bank of Canada rate drop meeting here in October, which was good if you have a variable rate mortgage. And the fixed rates are not dropping as quick as the variable rate mortgage, meaning that there is a sense of volatility out there with the bond market and how that reacts with fixed rates. So that's not changing things overnight, and the variable rate affects with what's happening in our economy, which if you've opened up a paper, watched the news, you kind of know where things are headed in the economy. So these are all culminating factors that really jump into a buyer's decision process as well as a seller, because if you have an offer in front of you, you're thinking about all of these things before you accept that offer. So I think the real thing you need to do right now is plan your 6-month timeline. And what does that look like? Are you going to be in this position where you are now? Are you going to be wanting to buy a house, or are you going to want to be selling a house? Because 2025 was one of the highest years of mortgage renewal rates in Canada, which is why we're seeing a lot of elevated inventory. And the market was great in January if you compare it to July. It was great in July if you compare it to October of this year. Now 2026, we also have another batch of record high mortgage renewals here in Canada. So if history has repeated itself or will repeat itself, I think 2026 may be a little bit gloomier than 2025. And unless we see some sort of relief in terms of our provincial, federal government, some incentives to be opened up, people are just going to have to ride that wave down, much like we rode that wave up in 2021. So I feel like if you are a seller right now and you're thinking about selling, reach out to your local professional in the Fraser Valley. Call us. We'll give you some no obligation advice on what to do, but you should be looking to see what that long-term picture looks like for you. And if you have any questions, please feel free to reach out and DM us, and we'd be happy to talk. This has been Matthew Rufh with the Rufh Real Estate Group for the market update of November 2025. Bye for now.